Hi, everybody. Martin Lopez from Martin Lopez Home Loans and the VA Mortgage Boot Camp. And I was hanging out with a buddy of mine, Stephen Winter. He's an amazing realtor over at Whistle Realty, powered by EXP. And we were talking about the market. And why don't you go ahead and share some of the stuff you were talking about earlier today about, inventory and all that stuff, Stephen?
Well, you and I were always brainstorming about how to bring value in really uncertain times, right?
Yeah.
And what have we been hearing forever? Inflation, Russia, Ukraine, supply chain shortages. I mean, nothing's positive.
Yeah.
And, factor that in with a roller coaster real estate market that we had until the middle of June this year, which was literally on a rocket ship up to, we didn't know.
Yeah.
And then all of a sudden, we didn't know turned into we ran out of fuel, and then we went off the cliff, and then we're like, oh my God, right?
Absolutely. Yeah.
And so you and I are always just trying to make sense of everything.
Absolutely.
And so what was really cool is like when I was at an appointment not too far from your place. I went over to your place. Sorry, I got a lot of craziness going on in the background, sick kids and stuff, but I stopped by, and then you all of a sudden started pulling out like technical stuff about mortgage rates and why. And I always want logic in situations like this to interfere, literally interfere with what's going on from an emotional standpoint. So why don't you tell us what's going on?
Well, I like what you said, because about the logic and interfering, because so many people are listening to the news and they're listening to their friends. Like I work with a buddy, and that guy really knows a lot about real estate because he bought a house, so he's the expert. And whatever he says is what I'm going to listen to. And you and I have heard that for years and years and years. But there's technical data that actually has an effect on what's happening, and we can project the effect based on the technical data. And most loan officers, I know very, very few loan officers that understand this stuff. So that's kind of what we were talking about. So one of the things that I know you always ask about is about the treasury, right? And I say, well, you don't really want to watch the treasury, because I watch mortgage-backed securities, which is the real-time what's happening in the market. But what I've come to learn and come to study is more about the treasuries, like what's happening with the treasury notes and the 10-year especially. And what we talked about today was what's happening with interest rates. So if you're looking, if you're out there looking at interest rates are hovering right around 7%. Would you agree?
Yeah, it was six something, seven something, and they fluctuate jumbo like VA, but for most people, yeah, around that range.
And so I'm talking about the interest rate as it relates to the 10-year treasury.
Yeah.
So what we did is we did some research, and we looked at the last 35 years of what's been happening with the market. And if you look at the 10-year note, the 10-year treasury, how it's trended with mortgage interest rates, interest rates are typically about 150 to 200 basis points above wherever the treasury is. So let me tell you what that means. You know what it means, but so what it means, 200 basis points means 2% above, 2 points above. So 2% above. So if the treasury is trading right now at 2%, then what you'd see is interest rates around 3.5 to 4%. That's right where you'd see interest rates. So right now the treasury is trading like right around 4%.
Yeah.
So what we should see interest rates at 6%, but we don't see interest rates at 6%. Now, how come? Well, because we're dealing with inflation, and what happens is eventually we have deflation, right? We have inflation, and eventually we have deflation, which means that money is going to be more scarce, and so then you're going to be able to have better yields on that money. Well, what's happening right now is because the investors, the people that buy the mortgage-backed securities, the people that buy mortgage rates, think that the market's going to get better. They think that the market's going to get better. They can see the trend. They can see inflation starting to taper just a little bit, and they can see that it's probably going to be not under control, but it's going to be in a better position in Q1. That's the thought. Q2 for sure. That's kind of like that's kind of the people that I talk to. So what does that mean? That means that inflation is going to drop, and therefore the Fed is going to drop the cost of the treasury note. So Well, the Fed does not control mortgage interest rates. The Treasury note will trend if you want to watch it. So right now, interest rates are, let's say, at 7%, and the Treasury is at 4. Well, earlier I just said that the difference, the spread, is typically 1.5 to 2 points above, right? So why is it 3 points? Well, because investors, people that are buying mortgages right now, people that are trading mortgages, expect every single mortgage, basically every single mortgage, to be refinanced in Q2 or Q3.
Yeah.
Right.
Yeah.
Well, if I'm lending you money, so you had a great take on that. So why don't you go ahead and give me something back on that?
Sure, and it's using the type of analytics that you're using. Plus, how long you been in the business again? How long?
I started in January. I started July 5th, 1985, brother. So it's been a couple years.
Right.
A minute, as they say.
Right. Just a minute. So the reason that I wanted to point that out is because this isn't your first rodeo. You've seen how these things play out, right?
Yeah.
So based on that, and we cannot say with exact certainty that this is how it's going to play out, but based on observations, the likelihood is pretty good.
Yeah.
So the reason I wanted to bring that up is because there's a lot of people right now that are just buying into the panic of the market, right? Like, no,
Yes.
not doing anything. I'm sorry. I don't know. And my job has always been with my sellers. When I list a property, I put a marketing plan together. And this is what I tell every single one of them. My job is to get people out of logic and into emotion. This way I can get people fighting over their house. Now, this is the reverse. This is getting people out of emotion and paying attention to the type of data analytics that you're providing so that I can bring them back to logic.
Yes.
Now, what will logic do in a market like this? First of all, we've seen massive price decreases in the past 4 months, right? Since June, I've watched prices come down 6 figures, multiple 6 figures, multiple 6 figures, right? So this market has taken a haircut. Now, I did my market numbers as well today, and when we were going on that stratospheric ride that I mentioned a moment ago, our inventory levels went down to 0.6 months of inventory, meaning less than 1 month of absorption. A healthy market,
like a little more than 2 weeks of
inventory.
Wow.
Yep, just a little more than 2 weeks. We were constantly hovering at 0.6 months of inventory. Right?
That's crazy.
And prior to the pandemic, because I do my monthly market numbers for years now, we were between 2.2 and 2.7 months of inventory. Now that still sounds low because a healthy market is 4.5 to 5 months.
So when was it the 2 point? When was that? I'm sorry, I missed that.
2.2 to 2.7 was before the pandemic began.
Okay, got it. Okay.
So our inventory levels were running low for a long time, but they weren't at that like 0.6 months, right? So we're talking, we got down to a quarter of that inventory.
Wow.
So there was nothing. You'd look in certain zip codes and there were 6 houses in entire zip codes, right? There were like 6, 7 houses. But when we were running
offers on them.
right. And when we were running in that 2.2, 2.6 range, there was still enough great properties, still got multiple offers, 2 offers, 4 offers, 5 offers, but not like 40 offers, right? Like what we were seeing. So why am I saying all this? I'm saying all this because when we were going up like this and there was zero inventory at 0.6 months, interest rates were low, economy was booming, no end in sight. Everybody wanted a piece of real estate, period.
Yeah.
Now, after the rates started to drop off in the middle of June, plus all the doom and gloom, Russia, Ukraine, China, Taiwan, supply chain issues, inflation, recession, talk, like everything, the public goes, oh man, no, like, I'm sorry, I'm sitting this one out. And in truth, where is opportunity found?
Yeah.
Opportunity, right? It's found in turbulence.
Yep.
We are in a turbulent time. This now, even though we're not at the bottom, we're relatively close to the bottom. Nobody can predict or time that bottom. But because we're so close, in my opinion, to the bottom, if somebody can stomach higher rates because they qualify, the stomaching of those rates is only temporary, in
Yeah.
my professional opinion, right?
Yeah. Yeah.
Based on what I'm seeing. These are just my
Could be wrong.
predictions.
We could be wrong. Yeah.
We could be wrong, but are we going to be wrong forever? Right?
No.
Is the price of real estate going to continue to fall like to 187,000 for a house on the beach? No,
Yeah.
it's just not. There's a threshold, and that threshold is also where rental rates are at. Because once a price falls to a certain point, an investor looks at it and goes, "I have a return there," and then there's a bottom, right? So again, if a typical consumer can stomach higher rates for the short term, 1 year, 3 years, I don't know, somewhere in that range, then guess what? With the inventory levels that we have, and I don't see them improving dramatically, because where are these people going with such low interest rates? They'll talk themselves out of moving, right? So the inventory levels are low. And with those low inventory levels, once the market changes again, and we get closer to what we'll call favorable interest rates, 4.5, 4.25, 4.75, that's favorable in my opinion, versus 6 or 7. Now what will happen? We'll have an escalation again, because people's purchasing power will increase based on the interest rate decrease, which will then escalate real estate prices. So buying in a market like this, regardless of how afraid you might be, you're only afraid of the unknowns because you haven't connected the dots.
Yeah.
We're here to connect the dots.
100%. So what I like about what you said was, well, there's so many things. One of the things you said was the rental. You know, if you look at the rental market, and so I've been looking at the rental market lately, and because I think the rental market's going to tell you everything.
Yeah.
The rental market is going to tell you everything. The rental market's going to tell you where the ceiling is. Now, I have looked at properties in all along the coast: Oceanside, Carlsbad, Encinitas, and yeah, Pacific Beach. So I've looked in like 4 or 5 different areas. Okay, and where 6 months ago you couldn't even find a rental property. There were no rental properties.
You
And
mean
all
for
of
sale or to
for
rent?
rent, for rent. There was
Yeah.
not only there was no inventory for sale, there was no inventory for rent.
Yeah.
And the rents were ridiculous.
Insane.
Yeah. And so this morning I was looking at some rentals, just checking out, see what's going on with the markets. I'm always doing that, right? There are reasonable rent values out there right now in the coast. And what I'm talking about is sub $5,000 monthly rents, Encinitas, Carlsbad, $3,200 in Carlsbad, $3,800 in Encinitas. So what I'm saying is that the rents are no longer pushing as high as they were.
Yeah.
I think why? Because homeowners are and investors are saying, I need to rent this property. I need to stop trying to, maximize this thing. I need to be more reasonable. I need to find some degree of security, and I'd rather rent it for low to have security than have it high and have somebody rent for a little while and then bail on me. And I think that's in that market. I believe always trends first, and then you're going to see payments kind of follow, and then you're going to see home prices adjust. And I think when you look at home prices that may adjust right now, but when the interest rates go from, let's say, I think it's going to go from like the 7s. I think we're going to see sub 5 interest rates in Q2. So that's my prediction. And when we start to see those, you're going to see values are going to stabilize. As a matter of fact, we're going to probably get a little bump. Why? Because the payments are going to drop.
Yeah.
So that house is going to be more affordable. Now, if you buy the house right now, what you're going to do is you're going to be able to own the house now. And then I think the likelihood is you're going to be able to refinance it and then be able that house that you're paying right now that you can't afford, because you're not buying homes that you can't afford. You have to qualify for the loan, right?
Exactly.
So like it hurts a little bit, but when I bought my first house, it hurt a little bit. My payment was $1,400. So, almost everybody hurts when they buy their first house. So I'm not saying go poor, but you have to qualify, which means you're going to have your ratios in line with what's affordable. So you're going to get a house. You're going to be able to buy a house that's affordable, and then as interest rates drop, guess what? That house is more affordable. but you don't have to go look for a house. You have a house, you just have to refinance, and
Yeah.
then you improved your situation. And I think the smart people are going to do that.
That's a safe position. It's the way I'm consulting my clients right now. If we can move past all the fear and emotion and uncertainty, listen, San Diego real estate's a great place to own real estate. I don't care what you're saying. If you look at most places around the entire country, very few places appreciate like San Diego real estate.
Oh God.
So, right? So you're not just buying a home, you're buying an asset here. When I have conversations with my clients, it's not just about buying a home, it's also about an exit strategy and how that's going to work out for them. Because we can talk about those things here, right? And we've seen people make hundreds of thousands or millions of dollars on their real estate holds, especially if you find value add on property, right, where you can build an ADU or you can expand or extend or go vertical or include a view into a future build of your house because of where you are. Like, where else can you do that?
Yeah.
So would I be talking about this in like ABC, state somewhere else in some city that is maybe by a river with a population of 800? No. But can we talk about this in San Diego County? Absolutely. And those are the things that I want to advise people on because, again, real estate is not just a home, it's an investment. Real estate affords you different write-offs that you can't get if you don't own real estate. So it's not just about trying to time the bottom of the market or, oh man, I'm so afraid. There's so many different reasons to own real estate. And if it's not tax incentives, if it's not just you building future equity, if it's not, this is my home and I'm going to create what I want, if it's not a legacy property where you want to build multiple units on it, right? With SB9 and the way different things have come down the pipe to help people because of the shortage of inventory here. Like there's so many positive reasons to own, but in markets like this is my favorite time because every single seller has a unique story and you could find some pretty sweet deals. I don't care what you see posted for list price right now. What's list price again? Right? Where before list price was like, is that even where I can remotely start? Nah, we'll go 100,000 over. Right now it's like, go offer some list price. What do I want? What are we doing here?
Well, I told you about a house that I closed today. It was a purchase, and the seller paid two. I think it was 2.5 points.
Say that again. Who paid for it?
The seller paid 2.5 points plus the closing costs.
Yeah.
Plus the closing costs.
Right? And what does that tell you? It tells you that every single seller has a story. And it's my job or Martine's job to tap in and find out that story and see what's going on behind that door. Like what's going on in that household.
Yeah.
And if there's opportunity, you can be the white knight, even if you're getting it at a massive discount or getting the seller to pay for different things. Because guess what? Life happens for every single individual. And for some, they may be going through some unfortunate circumstances where they will discount and liquidate in order to, right? That exists.
Exactly what this was. She's buying another house. The seller's buying another house. She in order to buy the other house, she needs to get this one sold. It has to be sold.
Yeah.
She needs money from it. So she really wants her new house. So
and that's it. Right. And that's the story. And there's motivation there. And what I will tell you is every second that ticks by on a listing, a seller is wondering, am I priced right? Am I going to sell my house? Am I getting an offer? Right?
Yeah.
Like, and then you bring one in and they're like, thank you. And they don't want to leave, right?
It's like posting on Facebook. You post something on Facebook. How many people like me, right? You're looking for the thumbs up.
Right? So
cool.
That's what I wanted to share with all of you today because I think so many people are unfortunately getting caught up in the entire ball of negativity, right? Inflation, mortgage rates, supply chain, geopolitical events, like so much stuff. But if you individualize them, certain things we don't have control over. We don't have control over this market, but we can predict, forecast, and also understand what the market's going to do. Because if anybody's ever sat down with a wealth manager, what do? They show you a chart that looks like this, but it keeps going up.
Yeah.
It has some down in it, but overall ended up like way over there.
Yeah.
So
you know what? I'll tell you something funny. I talked to somebody this afternoon that was thinking about buying. He wanted to, see what he qualified for, and he qualifies, no problems, really well qualified. And he says, I asked him, why does he want to? His name is Bill. I said, Bill, why do you want to buy? He says, I'm tired of paying rent. How much do you pay rent? He says, $5,000. So we're looking at the house that he wants to buy. The payment's going to be about $5,800. And he's like, I think I'm going to wait, And I was like, okay, so what do you want to do? He said, I think I'll wait like 5 or 6 months. I said, cool. So you're gonna. This is funny. I said, so you wait 5 or 6 months to save what? How much? He goes, I think I can probably save about $800. I said, okay. So in 5 months, you're paying $5,000 a month. You're going to spend $30,000 to save $800. He's like, oh yeah. And people don't think about that stuff. And I'm not saying people are dumb. The thing is that, Stephen, I've heard so many times, I've seen so many times where you spoke to somebody and they just didn't understand. And then when they were done talking to you, they actually understood. And understanding is a huge part of feeling secure, feeling safe, and being able to make a move. Because if you don't feel safe, if you don't feel secure, then you're not going to make a move. But if you understand, that goes a long way in feeling safe and feeling secure.
And that's why we're putting this content out there. It's to demystify what people are getting caught up in with everything that is going on in this world, right?
Yeah.
Again, if you're interested in real estate, this has nothing to do with what's going on in another part of the world, in the sense of you live in San Diego. This is your real estate. Factors that are political, sure. I mean, they can dictate things that happen on the stock market or things like that, but real estate per se, we're local.
Yeah.
It's geographic. We understand our market. This is a local market. Because again, if you take a house in San Diego and plunk it down in Arkansas, it's two different things. I don't care what the market's doing. I'm just talking about this little speck that we call San Diego and the real estate over here and how valuable it is. And it's more resilient than most parts of the country. So again, this information is designed just to get to have you see something a little bit different.
Yeah.
Where we're giving you opinions on why opportunity lies here versus don't buy, there's a bottom, this is happening. We want you to see the opportunity, because the unfortunate part is, and you can close it out with this, Martine, is when the market does change, it changes quick.
Yeah.
Right. And then once the prices, because their inventory levels are still hovering at 1.8 months of inventory, that's not much. So once everybody gets back on the bandwagon, then what? Everybody's looking again. And then what? Prices go up again. This is your opportunity to skip the line.
Yeah. I love it. Thanks a lot, Stephen. Let's do this every week.
I look forward to it, man. Thank you, Martine.
Thanks a lot, everybody. Hey, if you need any help, please reach out to us. We'd love to help you.
Look forward to it.
We'll put our information in the description. Take care, brother.